Welcome back to the channel, guys. My name's Jess. Today, as per usual, we'll be talking about Bitcoin. It has been a crazy 24 hours with Hong Kong ETFs causing massive disappointment in the crypto markets and seeing the price drop all the way down to $59,000. We're going to dive into all the recent price action and future potential scenarios, as well as talking about the monthly candle close and the potential for this to be the last red month of the year. Before we go into all that, though, make sure you guys smash that like button and subscribe to the channel to get regular Bitcoin analysis updates every Wednesday and Saturday. Alright, guys, so before we dive into all of the price action and future potential scenarios, let's go into what on earth has happened over the last 24 hours to make the price action so volatile. So on Tuesday morning, we opened to pretty bullish news. We had Hong Kong ETFs get approved and they started trading on Tuesday morning, and the expectations were that we were going to see about $100 million across all 6 Bitcoin and Ethereum ETFs in inflows. We also had the news that Australian ETFs were going to come out at some point this year, so the ASX was going to list their own Bitcoin spot ETFs, which again is bullish news and should overall increase the inflows that we have going into the market. But then we had the actual results come out for the trading volume for the Hong Kong ETFs, and they fell massively short. So instead of that 100 million that we were expecting, we saw 8.5 million for the day for Bitcoin spot ETF inflows, and Ethereum probably the rest of it, so about 1.5 million. So overall, it was pretty underwhelming and underperforming, and the market reacted to that quite badly. So originally, we broke out of what would have been a bearish pattern, broke out of our descending channel, and we tested this range of resistance here at $65,000. And then as the day progressed, we really started to drop. So on the 4-hour time frame, we closed back within that descending channel and had that breakdown to our base of support and the sell side liquidity level at $59,000. You can see that level on a 12-hour time frame over here. So $59,000 is that sell side liquidity, or the area where our bullish volume exhausts for the $60,000 range of support. If we zoom out as well and taking another look at this 12-hour time frame, we can see that this most recent rejection from $65,000 has now formed our 4th validation point for our high time frame downtrend. So currently we're traveling within this range here, $60,000 to $72,000, as you guys can see. But most recently, within the last 3 weeks, we've developed this huge high time frame downtrend, and it's really not looking quite good. So let's talk about what the most recent rejection means in terms of where we should be going next. So the good news about this entire recent move is that we, at the very least, bounced on this base of support here. So we saw a pretty big correction back upwards after we tested or touched that sell side liquidity level, right? And we had a nice strong correction back upwards into this range over here. So we're not hovering between sell side liquidity level and $60,000, right? So that is good. At least we are getting that strong bounce. However, the bad news is that despite that, overall, if we zoom out, we take a look at the charts, especially taking a look at this little segment of price action here, right? Let's make it black. So if we take a look at this most recent little segment, this 3-week-long segment of price action, what we're actually doing is forming a descending triangle pattern, right? So we have a horizontal base of support and we have a strong downtrend over here. So usually when we see this kind of pattern on Bitcoin, it is the other way around. So usually we have a really, really strong level of resistance. If you guys go back to $48,000 when we were trying to test $48,000 and break over that really strong level of resistance over here, this is the exact pattern that we were forming. And if you guys remember that breakout from $48,000, it was huge. It was extensive. We went right up to that $52,000 level. So same thing over here, right? So we're seeing a really, really strong level of support, right? So if we go back to, the right scale, we're seeing a really strong level of support. But what we're also seeing is every single time that we are, moving to test that base of support and bouncing from that base of support, we're seeing less strength overall. So the pressure going downwards is increasing and the strength going back upwards is decreasing. So what that tells us is we have a higher chance of breaking downwards than we do have of a chance breaking upwards. Okay, so let's talk about that bearish scenario and the measured move of this triangle, because that's actually very interesting. So the measured move of most consolidation patterns is pretty easy to figure out. And for this one specifically, the measured move is from the top of the trend line, or the very first retest of that trend line, and move to the base, and then that vertical height. So we have the top over here, and we have the vertical bottom at $60,000. I know we have sell side liquidity, but the actual range of resistance or support itself, the actual support itself lies at $60,000. So I'll bring it to $60,000 and we take it to the point of breakout. So $60,000 $60,000 is when we have confirmation. If the daily candle closes below $60,000, we have confirmation that we are going downwards. And that measured move takes us all the way down to $48,000, right? So that's another 19% correction. And if you guys remember on the macro charts, where is our next level of key high time frame support? It's all the way down at $48,000 here. So really, the measured move is taking us right down to that worst case scenario, 48,000. If we go back to the 12-hour charts, we can see we have a little bit of volume here at 52,000. So that original breakout from $48,000, we had a little bit of a slowdown over here. So we do have a potential of maybe moving to that level and getting a bounce there. But in terms of worst case scenario, that macro range of support is from $48,000 to $46,000. So potentially we'll fall into this range and deviate as low as 46, maybe a tiny bit lower, 45, before we finally see a bounce back upwards. So again, the likelihood of this bearish move is greater than the likelihood of a breakout. But the only thing that will really confirm to us that we're getting this move is that daily candle close below these levels of support here, right? Because again, support is support until it's not. So yes, we're consolidating in a negative pattern. We're consolidating in a bearish pattern, but we still have this level of support. So until we lose it, I wouldn't be like taking a short on Bitcoin or anything like that, or like, mass selling your portfolio. I wouldn't be doing that until we get that confirmation, and specifically even a daily candle close below sell side liquidity. Until then, we could still just be retesting, and we have a chance of breaking out of this high time frame downtrend in our next retest of the downtrend, so potentially our 5th retest of the downtrend, and getting that breakout then. So right now that level is $65,000, so breaking out that downtrend and this horizontal base of resistance at $65,000, that would be complete bearish invalidation. So that would be confirmation of the bullish case scenario, and that we're going to finally move out of this downtrend and back into these upper ranges of that $60,000 to $72,000 range. What we might also end up seeing is a rejection from this level. So say we get a rejection from that trend line again, we have a chance of breaking outwards if we get a bounce from $60,000. So essentially, as long as we hold this base of support here at $60,000, we still have a likelihood of a bullish breakout, right? It's just objectively looking at these charts right now, it's not looking bullish, okay? The likelihood of that breakdown is higher, but it's not, certain. Nothing in the market is certain. Nothing is 100%. It's not all doom and gloom. We still have that likelihood. It's just a smaller likelihood, okay? And Bitcoin does things that no one expects all the time. So maybe it'll break out. We don't know, but just keep your eyes peeled for these levels here. That daily candle close is confirmation of that downwards move. Candle close above the trend line, that's confirmation of an upward move. So that gives you some idea of if you're going to trade this, where to be putting your entries, stop losses, and targets. Now that's everything on the short time frame analysis or that daily chart analysis. Let's move on to the macro charts and our recent monthly candle close. So we have just had our monthly candle close for April about an hour ago, and we closed right within this little range over here at $60,000 on the macro charts. So like I keep saying, guys, while we're holding this level of macro support, it's still okay, right? It's not a surefire sign that we're going to go downwards just yet. But in saying that, we did have a very bearish month. So we essentially obliterated any progress that we had in the month of March, and we're right back where we started at the end of February. So after breaking over that $48,000 level and testing 60, we're exactly right there, right? So it has been a very bearish month. It has been, I think, the most bearish month that we've had since January of 2022, right? So a negative 15.4% decrease in the price of Bitcoin for the month of April. But what I really wanted to talk about in this little segment of macro analysis was the potential for a historical repeat of what we saw in 2020. So for those of you guys who don't remember, 2020 is when we had our last Bitcoin halving event, right? And that happened in the month of June. And generally after the halving event, we break above a key level of resistance, right? So that right now for this current cycle, it's $48,000. Back then, I think it was $10,700. That was that key level of resistance. And after the halving is usually when we break above that key level. But regardless of that, what usually happens after we break above that key level is, so first of all, we have a massive rally that takes us above the level of resistance. The subsequent month after that, so we broke above that key level in 2020 in July. In August, we had a really small rally, not too much price difference, just a lot of chop up and down within that little range there. And then the 2 months after that break above resistance, so in September 2020, we saw a red month. We had a negative growth of about 7%, I think. right? So that's what we're seeing over here. And we're in the exact same stage of the cycle. We had a massive rally in February. We broke above that key level of resistance, $48,000 in February. We had a subsequently smaller rally in March, right? We kind of just traveled within that range, $60,000 to $72,000 in March. But overall, we still grew a little bit, 16% growth. Same thing over here. In August, I had a 2.3% growth. And then in September, 2 months after that break above resistance, Bitcoin fell down to retest the closest level of macro support. So for this chart here for 2020, that closest level of support was at $10,700, right? And that's where the candle closed for the month. And then after that, we saw 1, 2, 3, 4, 5, 6 months. So the rest of that year was bullish, okay? And it went all the way up and had, the parabolic season of the bull run phase. So if we take a look at what's happening right now, right? It's looking very, very similar to how it looked in 2020. So if we go back to the short time frame charts, if we manage to get a breakout of this descending trend line down here, and we bounce from $60,000 and push up into these upper ranges, it could potentially signal the last red month that we have for the price of Bitcoin for the rest of the year. So realistically, the big question here right now is whether or not we establish macro support at $60,000 or at $48,000. Because if we don't get that breakout here, right, we don't break out of the downtrend, we will most likely fulfill this bearish pattern and go down to $48,000. So in that circumstance, we will have done exactly what the price cycle has done, broken above that key level of resistance and hopefully bounce on retest, right? So for us, it will be a pretty big move, obviously, compared to that move over here, because we rallied so much harder following the break of $48,000. We can debate about why that happened, but regardless, it happened. So if we go down to $40,000, obviously that would be very bad. But it also means that after that test of $48,000, in that worst case scenario, it would still be most likely the last red month that we have for this bull run season. Obviously, if you're already in Bitcoin, though, you want to know if you're going to drop to $48,000 before we see that rally. So naturally, the short time frame charts here on that 12-hour time frame is what you want to be looking out for right now. Alrighty guys, that is it for the analysis for today. If you guys enjoyed the video, you learned something, don't forget to like and subscribe to the channel down below. If you want even more content, I do have a free Telegram channel where I post daily Bitcoin updates as well as crypto and economic news. If you're interested in my VIP channel, you can check out more details over here. VIP gives you exclusive access to my personal trade setups, including entry points, stop losses and targets, as well as trade justifications and a risk management and trading journal. If you are a trader, don't forget to sign up down below to BitGet and BingX to get 15% off your trading fees. Hope you guys have a really great week, and I'll see you next time. Bye.